Welcome back. My name is Rich Curtis and I've been selling homes in Dorado County, the surrounding foothills, and Sacramento for nearly 20 years. And here are 27 real estate terms you need to know if you're gonna buy a house in 2024. Look, buying a home is stressful enough, and on top of that, you have to learn an entirely new language. So this video will teach you the terms you need to be well on your way to understanding the acronym-ridden alphabet soup that is residential real estate. Now I could do a video on each of these terms, but for today, I'm not gonna go deep on any individual term. I'm just gonna give you a quick definition so you know what it is when you hear it. Look, some of these terms have complex legal meanings to them, but I'm no lawyer and I can't practice law. So what I'm giving you here are the functional definitions of the way these terms are used in the day-to-day process of buying homes. Now, we're not going deep on any one term today, so if there's any terms that we discussed today that you'd like a deeper dive on, let me know in the comments down below and we'll do a video on it for you. Okay, without further introduction, let's get stuck right into 27 real estate terms that you should know, starting with number 1. RPA. That's the Residential Purchase Agreement. That's simply the contract that you're gonna fill out with your realtor in order to purchase a home. Number 2 is EMD, which stands for Earnest Money Deposit. This is a deposit of between 1% and 3% that you're gonna put up into the title company as soon as you're in contract to purchase a home. Number 3 is CDOM and DOM. Now DOM is just days on market and CDOM is cumulative days on market. This just represents the number of days a home has been actively for sale on the MLS. Now, if you pull a home off the MLS and put it right back on, that resets the DOM ticker, but it does not reset the cumulative days on market or CDOM ticker. So if you want to see how many days a home has really been on the market, always look at the CDOM. Number 4 is MLS. Are you tired of the acronyms yet? MLS stands for Multiple Listing Service, and it's a central database where all for sale homes are listed. Professional realtors like me agree to list all of our homes there so that everybody has equal access to them. Now, number 5 is contingent or pending, and this is a property status. This just means that the property is no longer active anymore, and for all intents and purposes, it means you can't write an offer to buy that property. There are some nuances to this, but in general, when you're looking at homes online, you want to stick to looking at the actives. Now, number 6 is executed, and executed simply means signed. I know, I have no idea why realtors like to make things so complicated, but this is it. Executed means signed, and its two brothers, partially executed and fully executed, just mean, you guessed it, partially signed or fully signed. Number 7, Ratified Contract. This is a contract that is binding because everyone has signed it. So saying your RPA is fully executed or saying it's ratified is essentially the same thing. It means you have an agreement between you and the seller, you've both signed, and you can now move forward with meeting each of your contractual obligations in the transaction. As you can see by this video, the backbone of my business is educating buyers so they can make good financial decisions when it comes to real estate. Feel free to give me a call, shoot me a text, send me an email, reach out. I get calls from buyers like you every day looking to begin their home buying journey and not knowing where to start. Number 8, contingencies. Contingencies are a clause in the contract that give one party or the other the option to cancel the contract, often with no penalty to them. For example, most home purchases are contingent upon the buyer getting a loan. If the buyer can't get a loan, they do not have to purchase the property and they can cancel at no penalty to them. So this simply means one party or the other gets an option to cancel without penalty. Number 9 is inspections. Inspections are simply anything you do to gain more information on the property you're thinking about buying. Examples are things like home inspections, pest inspections, well inspections, and septic inspections, but there are many more. Number 10 is due diligence. This is just a blanket term for you doing all of the research and inspections required for you as the buyer to be comfortable with your purchase, to feel like you understand fully the condition and the value of the home that you're purchasing. Now, number 11 is a special assessment tax. This is any tax that's beyond your basic tax. Now, bonus term here, your basic tax, a term that nobody really ever uses, is your ad valorem tax. So anything beyond that is a special assessment tax. You'll see them on your tax bill for things like schools, libraries, ambulances, firehouses, etc. Now, number 12 is Mello Roos tax. Now, this is simply a special kind of special assessment tax whereby builders and subdivisions pass on the cost of community infrastructure, things such as sidewalks, streetlights, and sewers, to the buyers, the eventual homeowners, and they pass this cost on via a special assessment tax that has to be paid off over a number of years called Mello Roos. Number 13 is title, and you'll often hear this thrown around synonymously with our next one, which is escrow, because they're often but not always provided to you by the same company. Now, title is going to do research and ensure that once you close, you're the only person who has any legal claim of ownership to that property, with the exception, of course, of whoever loaned you money to buy it. Now, they're also going to issue an insurance policy to that effect for you and one for your lender. Number 14, as I said, is escrow. Escrow acts as a neutral third party to facilitate the transaction for you. They're not going to exchange buyer's money or the deed to the property until the clauses in the contract have been met. They do things like receipt and deposits, handle signings, and eventually record the deed for you down at the county. Now, number 15 is settlement. Settlement is just a fancy term for closing. Realtors like to make things more complicated than they are for some reason. Settlement is simply closing, and that's what the title company will do at the end of the transaction. They will give the buyer's money to the seller, and they will record a new deed in the name of the buyer. Number 16 is your Supplemental Tax Bill. This bill comes in a few months after you close on your home, and it's just to charge you the difference between the seller's tax rate that you paid in escrow and your permanent tax rate moving forward. Now, if you want more details on this, how it works, and what it might cost you, I'll leave a link at the end of the video to another video I did called the 10 hidden fees every buyer should know before buying a home in 2024, and that will give you a lot more detail on your Supplemental Tax Bill. Now, number 17 is as is. Now, that term just means that the seller's not going to make any repairs unless they're agreed to in writing, and that they don't intend to make any concessions financially for repairs. Now, technically speaking, you don't really have to say that because every piece of real estate in California is sold as is per the terms of the RPA, the Residential Purchase Agreement that we discussed earlier. But functionally speaking, sellers use the term as is to communicate to a buyer that, hey, I don't intend to make any repairs or take any money off the purchase price for you for anything that's wrong with the house. Now, that doesn't mean you can't ask them for a concession or repair. And in my experience over 2 decades of doing this, that also doesn't mean they won't agree to a reasonable repair if asked. It just means that you can't expect any changing condition to the property, any repairs, or any financial concessions unless they're agreed to mutually in writing between the buyer and the seller. Now, number 18 is REO. This stands for real estate owned, in this case, owned by a bank. Now, you can think of these as post foreclosures. Someone unfortunately couldn't make their mortgage payments anymore, and the home was taken in foreclosure. It was then attempted to be auctioned off, and nobody purchased it at the auction. At that point, it was remanded back or given back to the primary lien holder, in this case the bank, and the bank is now selling the home themselves as the new owner. Number 19 is short sales. Now, short sales you can think of as pre-foreclosures. This is someone who wants to sell their home for any number of reasons, including potentially not being able to make the mortgage payments, but they owe more than their home is currently worth in the market. In order to sell, they need to get an offer from a buyer, and then their realtor has to go and negotiate with their primary and sometimes their secondary lien holder to get them to forgive some of the debt and allow the person to sell the home for less than they owe. Now, again, we did a ton of these in the Great Recession, and any grizzled realtor who managed to make it through the Great Recession alive and still standing in this business has a trauma response to the term short sale, but there aren't too many of these going on in our marketplace right now. All right, number 20 is PITI. PITI stands for Principal, Interest, Taxes, and Insurance, and this simply represents your entire mortgage payment. In order to calculate your entire mortgage payment, you have to make sure you're adding principal, interest, taxes, and an appropriate amount for insurance. So if you're doing this yourself online or getting it quoted to you from a lender, always make sure you're getting quoted a full PITI payment. Look, if you're getting any value out of this video at all and you're thinking about buying in Dorado County and you want to continue to get a solid foundation and education, go ahead and hit the like button, subscribe to the channel, hit that bell notification, check off all so you don't miss a future video. Now, number 21 are closing costs. This is simply all the fees associated with closing the purchase of your home. Now, here in California, you can ballpark these at 2 to 3% of the purchase price. I personally recommend always using 3% for these ballpark estimates. Number 22 is HOA. Now, these are the people that charge you a fee every month so they can tell you can't paint your house pink or park your boat out front. If you buy a home in a subdivision or planned unit development, you are likely to have an HOA. They'll charge a monthly or quarterly fee, and they'll put stipulations on what you can and can't do with your home and on your property. Number 23 is appraisal. An appraisal is a third-party estimation of value mostly intended to protect your lender's financial position in your property, but it is a fee that you as the buyer will have to pay for. Number 24 is CD. CD simply stands for closing disclosure and is a disclosure your lender has to give you right before you close, detailing all of the fees for closing your loan. It does come with a 3-day waiting period, so it can affect our timelines for closing. Number 25 is reserves, which is simply an amount of money that some lenders will require you to have in the bank to make sure that you're not financially tapped out on day one of owning your home. They usually measure this in terms of a certain number of months worth of mortgage payments left in your savings account. Number 26 is underwriting. Underwriting is really the name of a department within your lender, and they do all the background due diligence to make sure that you are actually qualified for the loan to buy your home. They're going to check your credit score, verify your income, all of those sorts of pieces, so they can ensure to the lender that you are a qualified buyer. Now, number 27 in our final term is digital underwriting. Now, this is the big brother of the underwriting department, where you can do this quickly and easily online. For some loan products, lenders have access to digital underwriting, where they can put in all your parameters and the computer will spit out a conditional approval for them. It's a streamlined version of underwriting that gives you a better and more confident sense up front that you will qualify for the loan you applied for. So there you have it. That was a lightning round of real estate terms so you can move forward confidently with your new vocabulary to purchase a home in 2024. But none of these terms will be very useful to you if you don't understand the costs and fees associated with many of them. To learn that, watch this video right here where I go over the 10 hidden fees that every buyer should know before buying a home in 2024. As always, thanks for watching, and I'll see you on the next one.